Hi, this is Paul Page at the Journal of Commerce. We're here at Trans-Pacific Asia Maritime talking to Tom Kim. Tom Kim is Executive Director of Asia Investment Research at Goldman Sachs. Tom, what's your forecast for Asia trade and Trans-Pacific trade for the coming year?
First of all, we are positive on containerized trade growth. We're looking at about 11% nominal demand growth for 2011. That's comprised of high single-digit growth for Trans-Pacific Asia-Europe with low-teen growth intra-Asia as well as emerging markets.
Great. Do you see any shift in global trade patterns, particularly affecting Trans-Pacific trade?
We certainly do. Bigger picture, our opinion is that over the medium to long term, we believe that containerized trade will continue to be driven by growth markets, particularly those that are resource rich, and the trade balances will shift from significant reliance on Trans-Pacific Asia-Europe to more of emerging markets, Latin America, intra-Asia, Middle East, and Africa. So longer term, we believe that growth will be driven more by these emerging markets, while the developed markets such as the US and Europe will continue to provide a very steady and high level of base cargo.
We've also heard here some people talking about China exporting or importing more. The consumption in China, demand growing within. Do you see China's imports perhaps growing? Absolutely.
We've already begun to see China become a major importer of raw materials and commodities. That's an obvious trend that's been going on and accelerating from the early 2000s. Going forward, we believe intra-Asia trade in particular will be driven by China importing not only semi-finished goods, but finished goods over the medium to longer term. That trend will continue to develop.
Right. The container shipping industry is coming out of a very volatile period. Do you think that container lines have sort of learned their lesson about how to manage capacity and rates at the same time?
I hope so. I think it's still early days to determine whether the industry is going to behave much more rationally. I think individually companies are quite rational. Collectively, competitive pressures causes the industry to do things sometimes that they may not seem rational to us. However, I would say what we've observed in the past 18 months is very encouraging. We've seen carriers take out capacity to respond to weaker demand. We've seen carriers price accordingly to recoup losses from 2009. And importantly, I think the industry is learning. And with increased scrutiny from creditors, shareholders, I do believe that the industry has more safeguards in place to help them behave perhaps better in future up cycles when over-optimism tends to create excessive new ordering. So I'm optimistic, but it's still early days yet.
Right. Okay, great. Tom, thank you very much. Appreciate your time.